You know that feeling, right? You're all set to buy something online, you hit pay, and bam! Payment failed. It is probably one of the most frustrating things in e-commerce. So, in this explainer, we're going to pull back the curtain on why that actually happens. By the end of this, you'll get what's going on with these complex security systems, and more importantly, you'll know exactly where the problem is when a transaction goes sideways.
This message, we have all seen this. It is the digital equivalent of hitting a brick wall. You're ready to buy, your customer is ready to pay, and then this. It's just this moment of pure frustration that can totally kill a sale, and honestly, it can even damage trust. But what you're seeing isn't some random glitch. There's a really complex system working behind the scenes.
So what is actually going on here? Is it the merchant's fault? Is it the customer's bank? A bug in the browser? That is the big question we're going to answer today, and we're going to do it by breaking down the two main security systems at play in almost every online checkout.
Okay, first up is pretty much the granddaddy of online card security, 3D Secure. This is that system that kicks in when you're suddenly asked for that extra verification step.
So, 3D Secure, or 3DS for short, is basically a security protocol. Its entire job is to make sure you are who you say you are when you use your card online. And you've definitely seen its brand names, things like Visa Secure or MasterCard Identity Check. Its whole purpose is just to add one more security checkpoint to fight fraud.
So where does that 3D in the name come from? Well, it has absolutely nothing to do with graphics or anything like that. It actually refers to these three domains. You've got the cardholder's bank, the merchant's bank, and then the card network, like Visa or MasterCard, acting as the bridge between them. This three-way conversation is the foundation of the entire system. And why do merchants and banks really love this system? Well, two big reasons. First, it obviously prevents a ton of fraud. But second, and this is the absolutely crucial point for businesses, it enables what's called a liability shift. See, when a payment is successfully authenticated with 3DS, the financial responsibility for any fraudulent chargeback shifts from the merchant over to the card issuer, and that is huge.
Now, the modern version, 3DS2, is way smarter than the old one. It basically has two main paths. The frictionless flow, that's the goal. Your bank system analyzes over 100 data points in the background, your device, your location, your purchase history, to assess risk. If it all looks normal, the payment just sails right through. Then you've got the challenge flow. That's the one you actually notice. It happens when the system isn't so sure, and that's when you get that pop-up asking for a code or an approval in your banking app.
And that brings us to the reality of 3DS today. The system is now so good, so efficient, that the vast majority of these authentications, we're talking well over 90% of them, are completely frictionless. They happen silently, instantly, and you, the customer, don't even know what's happening.
This kind of brings us to a paradox, right? If it works seamlessly over 90% of the time, why does it feel so broken to so many of us? Well, it's because that massive, successful base of frictionless transactions is totally invisible. We only ever see and remember that tiny tip of the iceberg, that small percentage of failed challenges that cause all the headaches.
Now let's switch gears and contrast that with our second system, the digital wallet. This is the tech behind stuff like Apple Pay and Google Pay, and it offers a totally different and, in a lot of ways, much simpler kind of protection. At the very heart of digital wallets is this concept called tokenization. It's a fancy word for a simple idea. Instead of sending your actual 16-digit card number across the internet, the system replaces it with a unique, one-time use number called a token. This token is completely useless to a fraudster if it ever gets stolen. The whole process is actually pretty straightforward, but it's incredibly secure. So when you add a card to your phone, a unique token, what's called a device account number, or DPAN, is created just for that specific device. From that point on, every time you pay with your phone, the merchant only ever gets that token. Your real card number never even enters the picture, which dramatically cuts down the risk from data breaches.
Okay, so we've covered the how. Now for the really important part, why it breaks. Let's dive into the most common support issues that pop up for both of these systems.
For 3D Secure, the failures are almost always on the customer side or their bank's side. It could be something as simple as a typo when entering that one-time password, or maybe the code expired because it took too long. A really common one is the bank having an old phone number on file, so the code never even arrives. And sometimes things like browser pop-up blockers or a VPN can actually stop the verification window from even appearing.
So here it is, the single most crucial point for any support team to understand: the merchant has zero control over the 3DS process. They can't trigger it, they can't see why it failed, and they absolutely cannot resend the bank's verification code. That whole challenge is a private, secure conversation between the customer and their bank, and the merchant isn't invited.
Now, digital wallet failures, that's a completely different story. When Apple Pay or Google Pay isn't working on a website, the problem is very often on the merchant side. Maybe they didn't verify their website domain with Apple, or maybe they're using an old, outdated payment API. It could even be that their payment processor isn't set up correctly to handle the decrypted tokens. These are almost always integration issues, not user errors.
So, let's put this all together. When a payment fails, how in the world do you know where the problem actually is?
Think of this as your cheat sheet. If the issue is with a one-time password or some kind of bank challenge, the owner of that problem is the cardholder's bank. If it's something about the payment token itself, well, that's on Apple or Google. If the entire pay button is broken, that's on the merchant's integration. But remember, at the end of the day, the final decision to approve any charge always rests with the cardholder's bank.
So, this is really the core tension in modern payments, isn't it? We have these two incredibly powerful systems, 3D Secure and Tokenization, and they're both working hard to make us safer online. But every single secure layer, every new party that gets involved in a transaction adds another potential point of failure. This complexity really is the price we pay for security. The challenge for all of us, for merchants, for banks, for developers, is to make this whole system not just secure, but truly seamless.